So this report cited unnamed sources saying that the supply chain constraints are actually frustrating consumers who are skipping on buying the iPhone 13. Do you know anything about this demand issue?
Hi, Sarah. Well, I think it's difficult to really know what causality is here in terms of are consumers just not upgrading at the rates that they did last year or at the rates that Apple expected, or have long lead times contributed to their, pushing out their desire. I would note that the iPhone mini and the iPhone are widely available now. You can get them at any geography in pretty well any Apple store. The Pros are still on back order, but the back order has come down a lot. It was as much as 6 weeks. You can now get Pros and Pro Max for iPhones globally within 1 to 2.5 or 3 weeks in most places. So still in time for, for Christmas and for holidays. And so I don't think it's necessarily the fact that there have been long lead times on the devices. I think there is a question from this report about whether iPhone demand is as robust as Apple had hoped going into the season.
And what investors were hoping for. How would you square investor expectations right now for holiday sales for Apple versus what you actually expect?
Yeah, look, this has been a really big question because last year was a great year for iPhone. We estimate that Apple sold in fiscal year 21 about 230 million iPhones. It was below 200 million in each of the prior 2 years. Not only that, but there was a really rich mix of Pros. And so there's been this big investor debate about whether, okay, you had 2 pretty soft years in fiscal 19 and 20. You had a really good year in 21. Could you have another pretty good year in 22? Investor expectations are that iPhones will be kind of flattish this year. And so certainly if we had softness beyond that, that would be a disappointment for investors. And I think the next 14 days are pretty important. Typically, it's this time, the last week of November till mid-December, when you start to hear order changes throughout the supply chain. And so if ultimately this is the case and demand is a little slower, we should be hearing it from more data points over the next couple of weeks.
Toni, I'm really interested in what you've been writing about in terms of Apple's buyback power of late. And I know that you think they've still got plenty of ammunition to continue those buybacks. My question is whether that has been a driving force already for the share price, and that as a factor that investors react to, it could fall away going forward, or whether, in fact, you think it means things like iPhone sales numbers don't matter as much because they've always got the buybacks to fall back on.
Well, the buyback, you're right, Wilfred. Thank you for asking the question. Has been an important part of Apple's earnings over the last 8 years. Reducing share count from the buyback has contributed about 50% of Apple's earnings growth. And so it has been very important. Now, as the stock price has gone up, it becomes more difficult to buy back at the same rate. But we still think for the next 5 years or so, Apple can buy back 3 to 4% of its shares per year. That helps EPS 3 or 4% per year. And if Apple were to take on some debt after that, which it could comfortably do, it could continue to do that for a longer period. So that is 3 to 4 points of earnings growth, which is helpful and meaningful for Apple. I think ultimately at 30 times earnings, which is where Apple is trading, top line growth is probably going to be the most important thing going forward. This is an elevated multiple for Apple relative to its history. I think the expectation is that, the company has a good product line. There's potentially more to come with AR, VR glasses or an automobile, and that the company can continue to grow the top line healthily. So if we do have weaker iPhone sales, that obviously it's about half of revenues that would pressure the top line. And that would likely be disappointing both for investors and for the multiple in the stock.